Hello again. I thought I'd give a little update, and this video is about choosing your benchmark wisely. So, we're all trading a portfolio of some kind. We're trying to beat, presumably, just buy and hold on the SPY, which is the easiest possible portfolio you could have. And it's surprisingly hard to do, but comparing against the correct benchmark, I think is necessary. To be intellectually honest with yourself. Can't just dumbly compare against a SPY. So anyway, to remind you, what am I trading? My portfolio consists of the 11 sector ETFs, FXI, EEM, TLT bonds, gold, oil, commodities, and Bitcoin. So the trading method that I use, kind of the active management style that I use, is first, if a stock is above its 10-day moving average, I hold $3,000 worth of it in a $31,000 account, and there are 18 stocks that I have in my portfolio. So if every single stock is above the 10-day moving average, I'm at about 2-to-1 leverage. So right now I've got about 1.6 times leverage. I've got $20,000 of margin on a $31,000 account. So if a stock falls below the 10-day moving average, I trade what I call the 3-day price slope method. And that is really simple. I just basically do a straight line fit of the last preceding 3 days of price data. If the slope of that line is positive, it's a buy signal. If the slope of that line is negative, it's a sell signal. So it's really, really simple short-term kind of momentum measure. If I'm trading a stock with that 3-day price slope method, I have a base amount of $1,500. Okay, so here's the slide I've been showing, which is the performance of my portfolio in blue versus the SPY and DIA, which is the Dow Jones Industrial ETF. The vertical green line shows the date at which I started kind of trading this hybrid method, 10-day moving average, 3-day price slope method. So you can see, boy, it's been like a legendary bull run for DIA. So DIA has been pretty hard to beat. SPY's done pretty well. The tech stocks have held it back a bit, but I'm closer to SPY than I am to DIA, and I'm beating the SPY, at least since I started trading the new method. So now for the benchmark, you'd say, why am I'm trading this portfolio of 18 stocks, I'm actively managing them. Really the obvious benchmark to compare against is that what I call the dumb sector ETF portfolio. So you basically just take the amount of money you have on day one, equally distribute it between the 18 stocks, and just hold it. If you're being more fancy, we could rebalance it, but in this case, I'm just going to hold the shares. So the blue line is my portfolio, and the red line is this dumb virtual sector ETF portfolio where you just buy and hold the sector ETFs. And you can see that I'm beating it. Really too early to tell, even though I've been doing it for 2 months. But so during a bull market, not a bull market, you could say a rally, a bear market rally like we're having now, pretty much everything is above the 10-day moving average, so I'm in with leverage. I'm in with essentially 2-to-1 leverage. So you would hope that during these rallies that I would outperform the virtual portfolio, and since I'm quickly can switch over to defensive mode, you would hope that during a downturn I would protect my portfolio better than just dumbly buying and holding. But we'll have to see. So this is a more fair comparison. It's early days, but we're not blowing away the performance of just buying and holding. It's always hard, when you're in a defensive allocation like this. It's hard to a defensive strategy like this. It's the switching from defensive to offensive. You're always going to lose probably at least a couple days where you're lagging the market. And likewise, when the market goes down rapidly, it's going to take you a couple of days to switch from offense to defense. So there's definitely some friction when you kind of manage an account, but so far it looks like it's doing well. Yeah, last slide I wanted to show was just it's really the performance of the SPY. So the blue curve is the daily SPY closing price. The red curve is the simple 10-day moving average. So as you can see right now, we're really in kind of an uptrend in the sense that most days in the last few weeks, the SPY has been above the 10-day moving average, except for that weird thing that happened last week. But now we're back up it again. And you can see the yellow curve is my cash allocation. And that's plotted on the right-hand axis. So if the cash was at 100%, it means I was all in cash. If the cash is at minus 100%, it means I'm essentially holding 2-to-1 leverage using margin. So anyway, it's a video that should be made. We always need to know how to compare ourselves to compare our portfolios. What's your benchmark? So anyway, I hope you find that mildly useful. Further updates will show the comparison against the more wisely chosen benchmark. See you till next time.